few days ago, I had a casual talk with my friends, and they asked me, how do you read condo insurance policy? They want to know what kind of coverage is on their condo insurance policy. So I thought it might be a good idea to shoot a video to go through some of the items on condo insurance policy. My name is Sandy Gum, and I'm an insurance and private equity advisor. And in this episode of Real Money, Real Talk, I'm going to go through the items of a condo insurance policy so that you have a better idea what the coverages are for and things to look for. Now, if you like this video, comment below. I can also make another videos of different type of insurance policy. Here's an example of condo insurance quote that I have recently did for one of my clients. I'm going to go over the details of this quotation so you have a better understanding what coverage for condo insurance. First of all, the left top corner is showing you the brokerage firm that requesting the quote, giving you the quote. The right upper corner is indicating the client profile, including the insured address. On the bottom over here, which you see a big box here, the top here will show you the quotation of this specific insurance company. Once you scroll down a little bit, you'll see the total premium. Premium is based on annual premiums. Most of the quotes don't show on the monthly premium, it's showing on the annual premium. You can pay insurance on an annual premium or on annual basis, but you can also pay on the monthly basis. The only thing you need to be aware is most insurance companies do charge 3% additional admin fee on top of your annual premium if you do decide to go for monthly payments. There is one insurance company that does not have the monthly fee for monthly payment. However, the overall cost for the premium might be still higher than other insurance company. So you still need to want to be sure to compare and see what will be the good fit. Now, before we go over the details of each item, what we need to know is why should you have condo insurance? Condo insurance is meant to fill in the gap for strata insurance because strata insurance has such a high deductible, typically more than 10,000 to all the way to $500,000. Because of such a high deductible, if the claim happens, then you are liable for such a big bill. For example, let's say if the strata deductible is 25,000 and a claim is 30,000. What that really means is you will need to pay for 25,000 out of your pocket, and that 5,000 will be paid by the strata insurance. If you do have condo insurance in place, then you can claim that 25,000 bills, claim against your condo insurance. In that way, you're only responsible for your own deductible, and then the rest will be paid by your unit condo policy as well as the strata insurance policy. So let's look at the details of these items. First of all, we want to take a look at the quote. What is the quote for? If it's a condo, it will show a condo here. If it's townhome, it will show it here. If it's single house detached, it will all show it here as well. So make sure the agent who give you a quote is actually quoting it properly. If it's for primary resident, it will show primary. If it's for rental, it will show rental. Now, for the protected, the wording over here, what that really means is a property that located in that area that is regularly serviced by a fire department and has hydrant access within 300 meters of the building. So that's what that really means. The bottom corner over here is basically the ratings designed by the insurance company, so you won't need to worry about this part. But what you want to pay attention is the form over here. Okay, typically there are two forms: comprehensive form or all risk form. The other name is called broad form. A comprehensive form, what you need to know is comprehensive form. It covers for all type of risk for both buildings and contents, except for specific exclusions found in the policy wording. The other one is called all risk coverage or broad form. Provides coverage against the loss caused by all perils, except those who are specifically excluded by the terms of the policy. So when you have different, seeing premium differences from friends and family, make sure you're comparing apple to apple. Comprehensive form is what we always recommended. There are only situations we may not able to offer that, such as rental properties. But for most case, primary type of quotes, you should always see comprehensive form. The only reason why people will go to all risk form or broad form is because they want to, again, to save money on the premium. I do always recommend for comprehensive form because you never know where the claim is coming from. And also on top of that one, it isn't a lot of savings much per se, maybe like $50 or, $100 more per year. Like if you actually break it down, it actually doesn't save you that much. If a claim happens and you only have a broad form, maybe a situation it's not applicable to claim for the loss, then you're paying your premium for nothing. So let's get started to cover for each item on the quote here. First of all is the content insurance. This portion is the amount of coverage for all personal contents, including major appliances on the policy. This coverage is for the personal property owned, used, or worn by the insured, which is you as a client, which is usual and normal to the ownership and maintenance of the property. What we typically see is average for $40,000 is the minimum, and this amount increase over time by the insurance company every single year to adjust based on the inflation. The next item is additional living expenses. Now, this part is automatically included inside the policy. You cannot take it out. It's within the policy itself. But what that really means is it's a coverage applicable when an insured building, like units in this case, is damaged by an insured peril, such as fire, water, to such to extent that one cannot live in it until it gets repaired. The portion of the insurance policy pays the extra amount to the cost to live elsewhere until the repairs are made, such as cost of living in a hotel or rent. I'll give you an example. So as I mentioned before, it's extra cost. Okay, so let's say your regular living expense is $2,000 a month. By moving to a hotel or another place, now it costs you, a living cost is $3,000 in this case, as example, per month. That extra $1,000 will be paid by the insurance company, not the full amount of $3,000. Voluntary medical and voluntary property are also automatically included inside the policy. Voluntary medical is the coverage that can be used by an insured for payment of medical expenses of an individual when they cannot legally liable for the damages but voluntarily wish to compensate the party after they accidentally injure themselves. It will also cover injuries sustained by the resident employees while working for you. So give an example in this case. I rarely see this claim ever come up. Most people don't do it, but it could be a case where maybe you have a friend with a baby visit your home and got injured. Maybe there are such as like expenses that's not covered by or covered within our Canadian healthcare system, such as like appliances or equipment, and you want to that kind of expenses to get paid for because someone got injured at your place and you want to compensate that, then you can use the claim. Voluntary property is covered for property. Okay, so the coverage can be used by an insurer for payment of accidental physical damage to the property of others when they are not legally liable for the damages but voluntarily wish to compensate the party. Okay, so one is for medical and one is for property. Contingent liability is part of the legal liability and personal liability extension. It's also automatically included inside the policy. It's a coverage in addition to personal liability that will respond in the event that the condominium corporation has inadequate or ineffective insurance or no insurance at all. The next item is loss assessment. Now you may see loss assessment comes property and loss assessment liability. Sometimes they combine together. Sometimes they just have different wording. So give you example, the contingent liability sometimes may show as loss assessment liability. So it just different insurance company have different wording, but they pretty much mean the same. So loss assessment, really just to kind of cover the loss assessment wording here. It's a coverage to help insure common areas of properties that are collectively owned by members of condo owners, and covering shared financial responsibilities that might arise in a claim process. The policy will pay for an assessment that made to the unit owner if the assessment is valid under the condo corporation bylaws, or if it's made necessary by a direct loss to the collectively owned condo property or common areas caused by a peril covered by the insured owned policy where the master policy is not valid and has inadequate coverage. So these are all part of the condo insurance. Now you may wonder how the amount comes like this. It's all based on the percentage how much you insure for your content. So in some cases, if client actually need to increase these type of coverages, they will need to increase or basically artificially trying to change the content amount in order to reflect the amount of coverage on those ones. But they are typically percentage inside the policy. That's why you see them. The next item is betterments and improvements. You may hear this word from your realtor to ask you to ensure you have this. It is automatically typically inside a condo insurance policy regardless. So what exactly betterments and improvement means? So betterments and improvements really means it's that additions or changes to a rented premises or the condo unit by a tenant or by a unit owner at their own expense. However, the coverage limits will be defined inside your policy wordings. So the amount is typically the same as your personal content coverage. How exactly it gets compensated, it will be specifically laid out inside the policy wording. Every insurance company has a little bit small variations. You may want to take a look. The next item is called deductible. Common deductible amounts for a condo insurance policy is actually now $1,000. However, I do see older policy that has a deductible for $200, $500. But most commonly right now, in 2020, you will see $1,000 is the deductible cost. So if you find your premium goes up quite a bit, it might be because you still have the older policy that still has a very low deductible, $200 or $500. If you increase your deductible to $1,000, then the premium will brought down to the one that you probably similar to your friends and family. So what exactly does deductible mean? Deductible is basically agreed on a specific sum to be deducted from the amount of loss and assumed by the insured. This amount that the insured is required to pay before the coverage on the policy will respond. So I'll give example again. Let's say if you have a water claim that cost the repair cost is $10,000, you will need to pay out of pockets of $1,000. $9,000 will go to your insurance policy. So the next one is saying replacement cost content. Sometimes you may see this, sometimes you may not. It should all have replacement cost content for any type of property insurance. Okay, so replacement cost, what exactly that mean? The cost to repair to replace or rebuild the lost or damaged property without deductions for depreciation. Okay, insurance is meant to replace something similar what you currently have. Is not to make a is not to meant to pay something to make it better. It's meant to basically replace whatever you already had before the loss. So that's basically what that means. It's usually automatically, again, it's a wording, automatically include into condo insurance policy or any property type of policy. So the next item is legal liability. Legal liability is it's a big umbrella. It's a personal insurance liability. You can have a choice of 1 million, 2 million. That's the most commonly seen. Some property I've seen up to 5 million. But most for condo, it's really just 1 million or 2 million. The difference is, again, typically average between $20 a year. So it's up to you if you want to do 1 million or 2 million. Okay. If you feel like if any claim happens that could arise legal lawsuit that may not have enough for 1 million, then you can choose 2 million, which is not that expensive either, which is just for additional between $20 to $30 a year. So what does personal liability do? Any form of liability insurance for individuals, basically what it does is to insure the policyholder in the event that they have become liable to pay for money for damage or injury that they have caused to others. Now, this form does not include automobile liability, but it does cover almost every activity of the policyholder except those which arise from the operation of a business. Okay, so automobile does not include, and business does not include. Anything else that you cause the injury or loss damage to the property to others, it will be under this umbrella. And this one is very important. So give you the wording that any rights, any claim, it does not need to be raised within your unit. It could be outside of the house as well. Maybe you cause property damage or cause someone else injury outside of the home. That could be also claimed back to your home insurance, which is your, in this case, condo insurance. Okay, the next section over here. Okay, you will see a quote. Sometimes it may show discount, sometimes it may not. It really, again, it depending on the insurance companies. It does not mean that your agent did not put additional discount. It might be simply that some insurance companies don't show on the quote per se. And also they have, if different insurance companies have different way of how they want to apply for the discount. But what you want to pay attention is the extended coverage. Generally, there are earthquake will be fall in under the extended coverages, water coverages, condominium deductible coverages, by law, thief, all sorts of different things additionally that you can add. But generally, what you want to pay attention really is the overland water coverage, condominium deductible assessment, and earthquake. So in using this quote as an example, let's talk about overland water. Now, overland water, some insurance company may take apart, have different type of water coverages. Some may combine all together. So you do need to pay attention to that as well. Now, with this particular insurance company, it's only showing the overland water portion, but it is included the sewer backup as well. So let's talk about sewer backup. Now, even though it's not listed over here, but most policy you should see that. Sewer backup is basically a water damage extension. Okay, this particular coverage will cover the sudden and accidental escape of water from a sewer, some pump, also like downspout or septic tank or drains. These are all applied to sewer backup type of coverage. But a separate deductible may be applicable. Some will be have like same as your other like basically your condo deductible 1,000. Some you may see higher than your regular unit condo deductible. It may be 2,500. It depending your claim history. If you have like frequent water claims, then you may see that specific water deductible is higher than most people. The next one is called overland water. So overland water is additional coverage, again, as an extension of water coverage that can be purchased additionally to protect your property from losses due to fresh water entering the property. So I think this one might be better off to show you a picture so you have a little bit better idea the differences between sewer backup or overland water. Now, just to summarize, some insurance company put it together and just call it overland water. Some put it specific separately. Some may say like, okay, well, the overland water is not applicable to your location. Okay, so make sure you do ask those kind of questions to your broker. But I want to show you a picture over here so that you can see the differences between sewer backup and the overland water. Okay, so this is using Wawanese as an example. So they have this very nicely drafted graph over here to show you the differences between sewer backup. So sewer backup over here, you can see on the graph over here that water enters because of sewer backup. Okay, inside, for example, from your toilet, from your sink. Sewer backup also can be due to severe rainstorm, but not an evidence of surface water. So again, it's not pouring from outside to inside. It's from inside up. Now, if you have an overland water, basically the water can come in from outside. Okay, so it could be from having a sewer backup or surface water due to overflowing of lake or river or heavy rains. Okay, so it could be water coming out from severe rainstorm from outside elsewhere that entering inside the property through windows or doors. Okay, so the difference is one is from inside, the other one is from outside. So let's come back to the quote here. I want to address the condominium deductible assessment. And this is the one you really need to pay the most attention to. Okay, if your strata deductible, let's say, is 50,000, you want to make sure you have enough coverage for this particular part. As I mentioned it, if you don't have enough coverage, if a claim is so big, that extra gap is what you need to pay out of your pocket. Okay, so in this case, for this particular client, the strata deductible is 100,000. So I need to make sure that her unit policy for the coverage needs to be matched the same amount, which is 100,000. So just to give a little bit more details in a bit more wordings here. So what this coverage is for, this coverage will respond in the event that the insured is assessed a portion of the condo corporation's property insurance deductible for a type of loss covered by the policy. So one last thing I want to address is the earthquake coverage. Now, earthquake coverage, I give this option to the clients. Water coverage, I don't give option to the clients because I don't know where the claim is coming from, and there are so many different types of water claims as well too. Overland water, I do give as an option. I show them the pictures, but sewer backup is not an option. And your agent should never take that one out as well too. It's very likely to claim from that. So let's talk about the earthquake insurance. Earthquake insurance is also optional, and the reason why is because some people believe in earthquake, some people don't believe in earthquake. Okay, so earthquake is basically for damage caused by an earthquake as defined in the contract. A deductible for this coverage may apply. So earthquake, typically the deductible is 10% to 15%, which means, let's say if an earthquake claim happens to you, let's say it's 50,000, and then the deductible will not be 1,000 because earthquake has its own deductible. Typically range between 10 to 15%. So using 10% as example, so 50,000 of 10%. So 10% of 50,000 is 5,000. So in this case, if earthquake happens that damage the building, damage your unit, then you need to pay 5,000 as a deductible. So what happens if you don't have earthquake coverage? Well, yes, your strata insurance will have earthquake coverage, but the problem is if your condo does not have a coverage for earthquake, you cannot basically claim if there any earthquake arise happen. So give an example again. So strata has earthquake coverage, and that said, after dividing all the costs, distributing the invoices for the loss from earthquake, you get an invoice from your strata board that say 100,000. Okay, now the rest, anything higher than that, is paid by the strata insurance. But that 100K might be because it's within the deductible. Again, strata insurance has their own deductible for water loss, for regular loss, and also for earthquake. Their earthquake deductible is also 10% to 15%. So you may get a bill from the earthquake damage from that 10% or 15%, whichever your strata insurance has. So that's safe. From that, you get a bill for 50,000, as an example. Okay, if you don't have a earthquake coverage on your unit policy, then you cannot claim your condo insurance. Okay, if you do have the earthquake coverage, then that's when you can claim under your condo insurance. So if your condo insurance don't have earthquake, even though you have your own condo insurance, because that pro is specific on earthquake, then you're not eligible for the claim because you don't have that specific extension. I hope you like this video, and please help me share to those who may have questions about their condo insurance policy. It is always a good idea to have an annual review on the policy because strata insurance do changes, and it's always a great idea to see if you still have sufficient coverage. Now remember to like my channels and subscribe my channel, and I look forward to see you next week.